When it comes to making financial decisions, it can be difficult to see even a few months, much less several decades into the future. After all, nobody anticipated a pandemic, inflation in the double digits, or a protracted war in Ukraine, and these are just some of the events that have occurred in the previous 3 years. Because of this, investors who are focused on the long term should give resilience and stability the highest priority possible beyond nearly anything else. The ability of a company to pay dividends requires that it maintains a consistent flow of cash in order to cover the cost of doing so. This makes dividends a useful measure of the stability of a company. Here are 7 dividend stocks to buy and hold forever. Number 7. Coca-Cola. Coca-Cola is a stock that has been around for a long time and will continue to be successful. This consumer staples stock is a worldwide behemoth that has been operating for more than 120 years, with operations in 200 countries around the world, and has a track record of 61 consecutive years of dividend growth, which is an outstanding accomplishment. Even if demand for sugary soft drinks in the United States is far lower than it was in the past, Coca-Cola products still have a significant amount of room for expansion in international markets, in addition to an extremely robust demand level in Western economies. A product range that includes not just Coca-Cola, but also vitamin water, Fuse teas, Powerade sports drinks, and Minute Maid juices, amongst other brands, means that there is much more to drink in this region than just Coca-Cola. The fact that Warren Buffett's Berkshire Hathaway is the company's largest stakeholder and owns more than 9% of the business demonstrates that the stock has the ability to generate profits over the long term. This results in significant institutional buying pressure, which helps to stabilize shares, as well as significant pressure to maintain steady dividend payments going forward. Number 6. The Consolidated Edison Company. When compared to the most well-known companies in the utility industry, Consolidated Edison is a relatively little player despite the fact that it is by no means a minor one. However, scale is not the only factor that determines the success of a long-term dividend stock. Con Ed is able to maintain its high standards of service while also maintaining a secure position in the highly competitive regional market that surrounds the metropolitan area of New York City. Since electricity is a necessity similar to food and shelter, there will always be a guaranteed baseline demand for it. In addition to this, the majority of power firms in the United States are regional monopolies, meaning there is very little competition between them. Because of this, Con Ed stock is appealing to income investors due to the fact that it serves 3.5 million consumers in the metropolitan area of New York City and 1.1 million more customers with natural gas connections. There is a possibility that a great deal will shift in the following decades, but given that Con Ed has awarded its shareholders with around 50 years' worth of straight dividend increases, it seems like a safe bet that this dividend stock will continue to offer income to its owners. Number 5. Johnson & Johnson. One of the 10 largest stocks on Wall Street, Johnson & Johnson is one of the bluest of the blue chip stocks. The company has a massive brand name and has been in business for approximately 140 years. It also has a high AAA credit rating, making it one of the only 2 corporations in the United States to do so. This establishes a rock-solid foundation for this business, which ensures that it won't be going anywhere very soon. In terms of long-term dividend, the healthcare giant has increased its payout for the past 60 years in a row, which is one of the longest track records on Wall Street. Despite this, the company still has a payout ratio that is lower than 50%, which suggests that additional increases may be possible in the future. This is a healthcare stock that has staying power thanks to its leading consumer health sector, which comprises high-margin pharmaceuticals and medical devices, in addition to products for the consumer market, such as Tylenol and Band-Aids. Number 4. JPMorgan Chase & Company. In the world of finance, JPMorgan Chase is often regarded as one of the most powerful players. It is unquestionably the kind of dividend stock that you can purchase and own for the rest of your life because of its huge operations and consistent profitability. JPMorgan Chase & Company was the first large financial organization in the United States to surpass its dividend levels from before the financial crisis. In 2008, the company paid $1.52 per share on an annual basis, and by the end of 2014, it had paid $1.56 per share. Compare this to a stock like Citigroup Incorporated, which paid $5.40 each quarter in 2007, but now pays a measly $2.04 per year. In other words, the dividend has been cut in half. Since its founding more than 220 years ago, this megabank has persevered through a wide variety of financial challenges to become the largest bank in the United States when measured by assets. If you are an investor with a long-term horizon, this is the kind of history that should inspire optimism in the years to come. Number 3. Microsoft Corporation. Even in the next 10 years, it is difficult to foresee how the technology industry would look the same, let alone in the next 100 years. Because of this, selecting a stock to keep forever is a very difficult task. Nevertheless, it looks like Microsoft is holding its own. It is a juggernaut worth $2 trillion that is unequaled in magnitude, and it is also one of the only firms in the United States to have a AAA credit rating, just like the previously stated Johnson & Johnson. It had a remarkable $100 billion cash reserve in its possession. When compared to the other dividends on this list, this one has the lowest current yield. On the other hand, Microsoft paid out a dividend of 23 cents per share for the first time in 2013, and now, 10 years later, the company pays out more than twice that amount at 68 cents per share. There is an incentive to buy and hold for larger payouts in the future if you are looking for long-term dividend growth in the stock you are investing in. Number 2. Prologis Incorporated. Prologis is the largest publicly traded real estate corporation on U.S. markets, despite the fact that the company may not be as well known as some of the other businesses that make up this list. Because of its size, it possesses unparalleled stability, which is unmatched by virtually any other company in any industry. But the thing that really makes PLD a company that you can buy and own forever is the fact that its business isn't connected to unpredictable housing or commercial real estate trends. Instead, its primary focus is on the operation of enormous warehouses, industrial assets, and transportation hubs. It has over 6,600 clients located in approximately 20 countries throughout the world, and it rents out a total of 1.2 billion square feet of space. Even while fluctuations in the state of the global economy are virtually inevitable, there is no reason to doubt that Prologis will be there in the long run to meet the needs of companies searching for space. Number 1. Verizon Communications. T-Mobile US, which holds the position of the number 2 wireless provider in the United States, has 110 million retail connections, which is much lower than the almost 150 million retail connections held by the telecom behemoth Verizon. Due to the fact that mobile communication is essential, as well as the stickiness of its clientele, the mobile industry enjoys an exceptionally steady flow of revenue, which is likely to continue for many years to come. In addition, it is anticipated that Verizon would record earnings of $4.71 per share for the fiscal year 2023, although the company only distributes dividends of $2.61 per share at the present time. That only accounts for around 55% of overall income, which indicates that payouts are not only sustainable, but also primed for further growth in the future. And taking into consideration the fact that the yield is already rather generous, this makes Verizon an extremely appealing wager for long-term buyers and holders of the stock. What do you think of our video? Let me know in the comment section below. If you enjoyed this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.